Okay, so we're continuing on exercise 17-4B. As you recall, the basic facts from exercise 17-3B carry over. The only difference is in 4B, the securities are classified as available for sale. So the balance of the investment available for securities bond T account, based upon the facts in E17-3B, consisted of the following three entries that you see: the acquisition entry made on the day we bought the bonds, plus the two entries to accrete discount on 6/30 and December 31st, yielding a balance in the account at December 31st, 2014 of $434,052. Now, the facts of the problem tell us that the value of the bonds at December 31st, 2014 are $430,000. So to implement the fair value adjustment needed at the end of 2014, we have to set up a fair value adjustment T account, which of course has a zero balance in it because this is the first time that we bought available for sale securities. So the question is, what balance do we need in that fair value adjustment account so that when that balance is combined with the $434,052 balance in the investment account, yields a combined balance equal to the fair market value of the securities, which is $430,000. Well, if you do the simple algebra, you'll see that the balance that we need in the fair value adjustment account at December 31st, 2014 is a credit of $4,032. So the adjusting journal entry that we're going to make at the end of 2014 is debit unrealized holding gain or loss dash equity account 4032, credit fair value adjustment account 4032. The fair value adjustment account is a permanent account. It's not closed out at the end of the year. The unrealized holding gain or loss account is a component of accumulated other comprehensive income, which is a component of equity, and it's not closed out either. Okay, so for the following year, we have the same carryover balances in the investment account, plus in addition we have the two entries to record accretion of discount in 2015, the 2692 debit and the 2786 debit to the investment available for securities bond account. So the balance of that account at December 31st, 2015 is $439,530. So and of course the balance in the fair value adjustment account is $4032, that balance carried over from last year, and the balance in the unrealized holding gain or loss account, which is a component of equity, carried over from last year. So the question is, and the fair market value of the bonds based on the facts in the problem, $425,000 at December 31st, 2015. So once again, the question is, what balance do we need in that fair value adjustment account so that when the balance in that account is combined with the $439,530 balance in the investment account, yields a combined balance equal to the fair market value of the bond, which is $425,000. The answer to the question, of course, is that we need a credit balance in the fair value adjustment account of $14,530. Since the current balance in the account is $4,032 credit, we need an additional credit to the fair value adjustment account of $10,498 to bring the balance in that account up to its desired balance of $14,530. So the journal entry to accomplish this is to debit unrealized holding gain or loss for $10,498 and credit the fair value adjustment account for $10,498. So when it's all said and done, here's what the financial statements look like, both at the end of 2014 and 2015. Financial statements in this case simply being the balance sheet. On the balance sheet, the asset side of the balance sheet, we've got cash, accounts receivable, ... They have all their balances, and then we get to the investment and available for sale bond account. The balance that you see there are $430,000 at 12/31/2014. and $425,000 at 12/31/2015. Those balances represent the netting of the investment T account and the security fair value adjustment T account. So that combined or netted balance is what appears on the balance sheet, which of course reflects the fair value of the securities. In the liability and equity section of the balance sheet, of course, you got accounts payable, all the other liabilities. Then you hit the equity section of the balance sheet, common stock, additional paid-in capital, retained earnings, and then you get to accumulated other comprehensive income. And the accumulated other comprehensive income that you see there of 4,032 and 14,530 represent the balance in that unrealized gain or loss dash equity account.